Good afternoon, this is Adam Tuiaana with FCOJ-A Futures in Chicago, coming to you with your soft commodities report for the afternoon of Wednesday, March 13th, 2013. Jumping right into it, a lot of happening in the cocoa market this afternoon. Cocoa last traded at 21.48, which actually puts cocoa down 10 ticks on the day. A lot of things happening with the Ivory Coast, and basically what's happening out there is a lot of the cocoa dealers are being delayed because they're lacking some permits. So I think what we're going to see from this is, especially towards the end of the month, we may see some possible export defaults coming out of the Ivory Coast, just in time, of course, for Easter too. So will this have a huge impact on the cocoa supply that'll be in place come Easter? It's still pretty questionable. There has been a solid downtrend in the cocoa market for quite some time. We're talking September, October sell-off. So this is a downtrend that's been in place for quite some time. Last video I mentioned the 2150 level, 2150 level, as being the next area of resistance, which actually breaks this trend line that we've had in place for quite some time. That level, 2150, was breached with a couple days ago with the price action there and the high there. So does this necessarily mean it's going to be a reversal to the upside in cocoa? I don't think so. In fact, I don't want to say anything until we get the grinding totals out of the European cocoa grinding totals, which are due out next month. That'll have a huge impact in being able to tell us what the demand for chocolate is going to be. So until then, I am continued bearish. There is a pretty weak global demand that's out there, especially out of the Eurozone for cocoa. So I'm going to continue trading with the trend on that to the downside. Moving over to coffee, which last traded at 140.15, 140.15. Is a huge day down for coffee. 220 it puts it down on the day. This has been a sideways market for a little while in the coffee market, but that's by and large because of a huge off-season Brazilian crop, a big supply of coffee that's out there. Now that's, in addition to that, out of Uganda, you also had some big exports as well. Approximately up 34% from last year, so that in and of itself is pretty bearish. You do have some counterbalancing fundamentals. To the bullish side, you have some dry weather forecast out of Vietnam, which is a major producer of coffee also. You still have the ongoing Roya fungus issue that's going to affect some crops in Central America as well. So I think there's going to be some good resistance here at the 147 level. I've been talking about that resistance for a while. We tried to challenge it and we pulled off of it. Again, last trading at 140.15. So I'm still bearish on coffee. In addition to that, you probably want to look for that next level of support to be breached, 137.60, 137.60. So keep a close eye on that. Moving over to cotton, last traded 88.59, puts cotton up on a huge day, 126 on the day in the May contract. I have been bullish for a while on these videos on cotton. You did have a semi-bearish USDA report in ending stocks that came out last week, but there is a very strong global demand for cotton. Obviously, commercial buyers are still active, so you're seeing the market rally quite a bit. China has also come out and said that they're not going to be releasing any of their cotton stocks. So look for that next area of resistance to be broken, 88.78 to the upside, and the support level, critical support level, can be found at the 85.59 level. And last but not least, sugar. Last traded 18.77. That puts sugar down 5 ticks in the May contract on the day. Sugar's still trying to challenge that 1900 level, 19-cent level. Sitting at the 1800 level, at the 18-cent level for quite some time. There are some mixed fundamentals on sugar. There is a huge global surplus of sugar that's been going on for quite a few years. The last 3 years in a row have been a surplus. There have been some dry conditions reported out of India, which could be a little bullish. But watch that 19-cent level. We got our eye on that here. Look for it to come into some resistance also. Also talks technically of a head and shoulders reversal pattern to the upside. That could definitely be possible. So we're monitoring that 19-cent level right now is pretty key to determining whether sugar is going to turn around and come back up or whether it's going to continue to sell off. On the downside, look for 18.48 to be your next area of support. Again, this is Adam Tuiaana with FCOJ-A Futures in Chicago. If you have any questions you want to talk about strategy, risk management on the futures or options on futures, you can call me directly at 312-373-5392. And please remember that futures trading and options on futures does present some risk, and it may not be suitable for all investors out there. Have a great afternoon.